The uptrend on Bitcoin over the last 2 weeks has been showing us glimmers of weakness over the last few days. Of course, as we approach a macro horizontal resistance, this is expected. However, on the daily chart, we're starting to see some bearish divergences pop up. We're going to discuss what this means, what will it require to see the continuation upwards, and how likely is a move toward the downside. Let's get into it. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day. Obviously I'm back today, so it's great to be here. We're going to go ahead and get into a Bitcoin analysis today, discussing the recent price action over the last 24 to 48 hours and obviously what is happening now. We'll also talk about the macro chart and obviously the bearish divergence that is popping up here on the daily chart, and more importantly the short-term price action, as we have seen a decent amount of volatility in the last couple hours, particularly in the last two. Before we get into it guys, smash the like button, hit the comment button. Obviously if you do like technical analysis, if you like daily videos of Bitcoin, we do all of that here, so go ahead and subscribe to the channel. You can also get updates in our Telegram channel. Videos, analysis, charts, information, so much more in here guys. Everything is posted to keep you guys up to date. You can also join our VIP channel, of course. All of our VIP members are in here. We've got over 520 VIP members. You can see we have daily trading signals, targets, stop losses, entries. Everything is laid out for you. In fact, we just did over 350% on a ICP long that we took quite some time ago. So go ahead and join up there. You'll also get access to our group chat with all of our members in there as we discuss Bitcoin and trading every single day. Let's get into our video, starting off with the market data as always. So how are we looking currently for the week? We're up 0.3 as we can start to see. We have had the majority of our move occur within that second week of January. We're starting to slow down in our move as we approach this upper resistance level, which has been a long-standing resistance over the last, well, we would say 2 years of Bitcoin now, finally retesting it once more in January 2023. And obviously this area here being a major resistance is going to be a major point of confluence on the chart, an area of which we could potentially reject from, and this is what we've been talking about over the last few weeks on the channel. If you have been watching, you would be well aware of this level on the chart right now. Obviously, looking at Bitcoin right now for the month, we are still up 37.5%. Historically, one of the best months we've ever seen in Bitcoin. It's a top 10% performing month for the Bitcoin ever since 2014. So a phenomenal month. Looking at our data over here, in 24 hours, our volume has dropped 16%. We're down to 86 billion. Looking at our liquidations, we're down 46% to 100 million. We do have a little bit of a discrepancy here between longs and shorts, slightly favoring the short side right now, after we did see basically a pretty brutal wick down, liquidating the whole heap of longs. Nearly $30 million in longs wiped off in a 30-minute period here in that last candle downwards. Looking at volatility, we're at 2.12. This will start to slow off a little bit now, as in the last few weeks, or last week should I say, we have been plateauing here, and we have had on the broader spectrum a decrease in volume and volatility. Again, with the current rates, we are looking at the majority of liquidations being short, so we did have a large liquidation in longs about 24 hours ago. But for the majority in the last couple hours, it has definitely been into the longs over here. Let's take a look at the broader markets. So the DXY is at a very interesting position. Again, something we've been watching for now weeks, right? We've been looking at this ever since 2023, the start of 2023, and even before 2023, as we approached, in this range over here. We've identified a channel, a descending channel, which we've been in. Currently, we are in a falling wedge structure, as you can see, represented by a downtrend, okay, two descending trend lines being our support and resistance, which are converging. We do expect a break upwards from the DXY. Obviously, this is bearish for Bitcoin. Now, this is where we have to get a little analytical. Excuse me, I can't talk today. DXY is at support, Bitcoin is at resistance, S&P 500 is over resistance. So it's quite an interesting combination of price action we got over here. As the DXY is at support and Bitcoin is at resistance, we do have to be a little bit more inclined to expecting a drop for Bitcoin. If the DXY does find support here and rallies, we can expect the markets to slightly pull back, okay? Obviously, the DXY represents the strength of the dollar, and that is inversely correlated to a degree of 0.7 with Bitcoin, and more strongly correlated with the traditional markets. So looking at the structure over here, this is a bullish structure. So if this does break up to the upside, which is expected based on the current structure, has about a 73% chance of breaking upwards, we are more likely to see a correction incoming for Bitcoin. Then we are likely to see a straight continuation through this resistance range and straight upwards. Now it is possible, and we'll talk about that in today's video, we'll talk about what needs to actually occur, but if we're looking at a probability standpoint, what is the probability that we continue downwards here? The probability that we reject here and move into a healthy correction towards this level, potentially even a little bit lower before we continue upwards, is greater than the probability that we just push right through this resistance and shoot back up to 28,000, okay? It's all a game of probabilities. We'll come back and talk about that in a second. Looking at the Dow Jones, we are at resistance here. Nothing too interesting at the dotted line. Breaking through a dotted line will send us upwards. We do need to break through these local highs, and most importantly, 35,000. Looking at S&P 500, it is looking decent. We nearly have that weekly close above the resistance, so we do have about 19 hours to see. S&P 500 looking great, okay? There's absolutely no doubt right now. S&P 500 is looking really good. Of course, this will be very, very good for Bitcoin if we are able to close above, but it's got 19 hours, so a lot can happen, and by tomorrow's video, we should have an update on that, okay? Let's go ahead and jump into Bitcoin, starting off the macro, and then we'll jump into the short term. So as we have said already, guys, we are starting to see our bearish divergence pop up. And this, of course, is a rising price, okay, with a decreasing momentum. So a decreasing RSI, as RSI represents speed, velocity, and momentum at price action. We can see we have this downtrending resistance here on RSI, and obviously the price action from that point has risen. So we have a bearish divergence, a discrepancy between momentum and price. Now, price generally follows momentum, so we have rising momentum, and rising price signifies a strong uptrend. If we have rising price and falling momentum, it signifies a weakening in the trend. Now, if the trend is starting to weaken at resistance, it is likely to reject and come back down. So that is kind of where we're standing at right now, and that obviously that daily RSI divergence is quite significant, as it isn't a smaller time frame one, it is starting to get into the larger time frames. And like we said already, although we saw these divergences pop up on like the 4-hour chart a few days ago, it does take some time to see these divergences translate to larger time frames. They do have to remain consistent, and this bearish momentum has to start decreasing over a period of days for it to start actually popping up on a larger time frame, as a larger time frame is a more smooth version of the small time frame data. So we'll come back to the small time frame in just a moment, but of course a daily RSI is signifying a potential rejection. What would it take for Bitcoin to continue upwards? And then we'll discuss where Bitcoin can go towards the downside. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the Mega Whale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. So if you are new to the channel, really quickly, we broke out of our falling wedge. This falling wedge structure is something we talked about for quite some time. Actually, we're talking about this falling wedge structure ever since we created this local top here and this local bottom over here. So looking from about early November to the breakout point, we were discussing the falling wedge. And we said a falling wedge is a bullish reversal pattern. We had decreasing volatility this entire time, okay? Decreasing volatility, decreasing volume, okay? Falling price action and compression in price action, okay? All of this tells us within a downtrending structure, which is of course a bullish structure, it signifies bullish consolidation, okay? It's a downtrend, but it signifies bullish consolidation. What it's telling us is this downtrend that we entered from, this entire downtrend here, is starting to weaken. We have aggressively sloped downtrend, followed by not so aggressively sloped downtrend, which is converging with decreasing volume, volatility, and obviously compression. That means we're going to see a reversal. We saw the reversal, we said, at 19,200. If we break that POC level, we're going to continue upwards to our next target, which was actually 22,600. We went a little bit higher, went to about 23,800, obviously with liquidation, but we reached it. We saw a nice breakout. This entire move here is not a macro uptrend. This entire move here is not even anything of significance. What it is it is a reversal. It is a reversal out of a macro structure, which is a falling wedge. Now, for a macro uptrend to initiate, we need to turn our reversal into a macro uptrend. And to see that occur, we need to break through the upper resistance on the macro chart, which is a $22,600 to $24,000 level. Breaking through this level turns our reversal, which is this, into a uptrend, which is over here, okay? And breaking through our yearly resistance over here turns the uptrend into a bull market trend. It facilitates a bull market, okay? So we are quite some time off a bull market, guys. We are quite some time off a macro uptrend. This is the start of a macro uptrend. Now, like we said already, we can definitely continue up here. What will it take? So let's talk about that. The VRPV is a great tool. Looking at our levels over here on the daily chart, particularly on a 4-hour chart, we can see a few really interesting things. Looking at the VRPV here, we can see immediately after this chunk of volume over here, we have a significant drop off. We have a pretty strong drop off, okay? Looking at this resistance range here, the majority of our resistance within this resistance range occupies this lower half. So it's distance between the red line and the 22,600 level. I'm going to go ahead and draw it out for you again, just to make it a little bit more obvious. If we've split this entire resistance range up by this red line in the center, this orange line now, we have a lower resistance part of the resistance range and a higher resistance part of the resistance range. Of course, this entire range makes up our resistance, okay? Breaking through a strong point of resistance within the range enables the price to move a little easier through the upper part. If we have bullish momentum pushing into this area over here, obviously with the shift in momentum that could occur upon that break, and that break itself, we are pushing into a lower historical resistance range within that resistance range, enabling and facilitating a continuation upwards and potentially through. So a continuation can occur, guys. We do need to see a 4-hour close above 23,350 to see that continuation. Where can the continuation take us? Again, we will be pushing up to the upper ends of the resistance, so potentially retesting 24,300. 25,000, obviously being that local high here. Breaking 25,000 will continue us up to 28. Again, like I said, it's possible, but the probability this occurs, as opposed to a continuation down, which we'll talk about now, is less likely. So, short-term continuation downwards, what are we looking like? I don't know what the hell that's doing there. Okay, so, as I said in the intro, guys, we have broken out of a diagonal. Now, we're looking at this diagonal a few days ago. Actually, 2 days ago, we said a breakdown of this diagonal was pretty significant, as it signifies not only have we shifted bearish momentum, but the trend itself in terms of our structure has actually shifted towards the downside. And even more prevalent on a 4-hour chart in comparison to something like a 1-hour chart, we can really see how we rejected from this trend line on this diagonal over here. So what we can see, guys, is we do have this breakdown over here, again, signifying a potential reversal. We have got that bearish momentum, obviously the RSI, such as shown you on the daily, and even on the 4-hour, we do still have that bearish divergence over here, so rising price, decreasing RSI, signifying a decrease and weakening in that trend. Upon that, obviously looking at our moving averages, guys, we are starting to push through our smaller time frame moving averages. You can see over here, we have been showing signs of weakness over here. So glimmers of weakness on a larger time frame, a glimmer of weakness over here. But opposed to that, we've been pushing and staying within and above our smaller time frame moving averages. Over here, we're breaking back below it. So again, we are very likely to lose our 50 EMA if we do retest it again. It's not going to be acting as an area of support. Currently on the very small time frame, we are actually finding temporary support on the lower part of the current resistance. So we'll go down to like a 1-hour chart, guys. We can see this over here. Give it 1 second load. Okay, we can see over here, guys, we do have this lower support of resistance over here. This is our resistance zone, obviously was distance between here, but this area here is now going to be acting as temporary support. So not a proper support, just a temporary support. Obviously moving between this range, we have developed some sort of horizontal consolidation. So we can go ahead and put our horizontal level zone over here. We can see sideways consolidation between. Okay, so looking at the directional break over here will determine the continuation. Like we said already, the upper part of that horizontal channel is going to be that same part which talked about prior on that macro, that continuation, that trigger for a continuation upwards, and obviously that lower part over here being that 50 EMA area on the market cipher, which again that will converge upwards, and we should trigger a continuation downwards if we do lose it. So we are looking at this horizontal consolidation right now for the next move on Bitcoin, and obviously if we do break towards the downside, guys, the targets are very simple. We are looking for our prior levels, so looking for our horizontal consolidation here. Upper and lower supports are going to be our targets. Looking downwards, 21,000 to 20,000 psychological, 19,500 to 19,200 VRPV on the daily. Okay, those are going to be the lower targets if we do continue toward the downside. Otherwise, on the upside, we do have those levels. Let's go back to the daily, guys, and do a quick TA on some other indicators opposed to the RSI. So let's go ahead and bring up our market cipher really quickly. Let's see what we're seeing on a 4-hour chart. We did look at the 4-hour chart over here, so it looks like we are converging downwards. And obviously, if we go to a 3-day chart, we can see we definitely have pushed up quite some amount. We do have that crossover coming here on the 50 and the smaller time frame areas. But again, if we are looking at the price action on a larger time frame chart, particularly looking at moving averages and indicators based on moving averages on a larger time frame chart, is very, very important to understand. After we have very explosive moves, these indicators are lagging and they're going to show significant bullishness. It doesn't necessarily mean the price will continue on the macro. It tricked a lot of people at the all-time high. It tricked a lot of people at the bottom. At the all-time high, we had a significant rally upwards. We had like a 50-60% move upwards, or 60% move upwards. All the lagging indicators at this point here were saying we're ultra bullish. Absolutely ultra bullish, and a lot of people were expecting 100k, 200k, 300k even. Okay, if you're looking at reversal points, don't look at indicators, look at structures. Structures and zones tell you where the price action is going to go and where it's going to move. The indicators tell you the strength of the trend. So if the indicators tell you the strength of the trend and we just had a massive rally upwards, isn't it only fitting that the indicator is going to be suggesting the strength of the trend right now is currently very bullish? Of course, it doesn't mean the price will continue. It is simply signifying the current strength of a trend is very bullish. And again, with the 50 EMA cross coming, it does signify an incredibly strong move, which we have definitely seen. Let's go to look at the Ichimoku cloud. So Ichimoku cloud on daily chart, again, which we're still seeing strength here, guys. The price is definitely over our conversion baseline, even over our Ichimoku levels. Looking at the 3-day chart, very, very interesting. We are pushing into and just out of the cloud over here. Again, pushing through the clouds over here is good to see. We do have our conversion line baseline, and more importantly, our lagging span, which is this green line over here, pushing into the clouds. We do want to see a break through the clouds to see any sort of continuation upwards again. Until then, guys, even on a larger time frame, it is signifying resistance at this level. If we go to an even larger time frame, again, we are not even close to that, what we will call a macro uptrend yet. Again, we do need to reach those certain points to create a macro uptrend, and according to the 4-year cycle, guys, we're not expecting a bull market to start until April 2024. So we do have a lot of time. Don't expect the bear market to be over in a second. The bear market is definitely over, but don't expect the bull market to start the first month out of the bear market. It will take time. According to historical data and historical ranges, we generally see about 16 to 17 months, guys, of chop slightly upwards price action before we enter a parabolic rally. A parabolic rally lasts about 18 to 19 months, okay? And that initiates within the monthly break over the baseline on the Ichimoku cloud. So our red line over here, monthly candle close above, that is when we kind of initiate that parabolic rally. If we're looking at the price action over here, from the bottom to that point, we do generally move quite some amount, okay? 150%, 150%, So we generally do see quite a strong move, assuming that's going to go same thing again. We're looking at, 40,000, a potential move upwards, and that will kind of meet that baseline. So we could potentially move massively upwards before we really kick off the bull market, if you think about that, guys. Okay, very important to limit your expectations on a month. Already January has seen nearly 40% rally in just this month alone. Do not expect this trend to continue aggressively without some degree of pullback first. Okay, that is not me saying the bull market is not here. It is not me saying the uptrend is fake. It is not me saying I'm a bear. I'm definitely not a bear. I'm definitely bullish on Bitcoin. In fact, I bought Bitcoin at 17,600, but we do need to limit our expectations and be realistic on what we're looking at. Otherwise, we're going to get caught up in emotions and we're just going to get wrecked. Okay, so be realistic, be objective, and even when the data opposes what your current position is, that is not something to be scared of. That actually benefits you. Be brave enough to look at the data for what it is, even when the data negates your position. If it does, take action instead of sitting there and trying to find ways around to validate your position and, emotionally deal with the fact that you aren't in a winning trade. Take the loss, close the trade, or position yourself better next time and look at the data more objectively so you don't get into those positions again. Okay, I'm going to go ahead and end the video there, guys. If you enjoyed the video, smash the like button, comment, obviously all that good stuff. We do have the Crypto Academy course. You can go ahead and sign up to it. You can go ahead and contact us via email down below. You can get access to our 10-unit course, guys. All the information there. We talk to you about concepts, technical analysis, market patterns, indicators, candlesticks, how to trade, trading strategies, even market psychology. We teach you guys how to analyze charts like I did in this video. We teach you guys how to trade like we do in VIP, and so much more, guys. So go ahead and contact. Email, of course, is over here, and this is the website. We'll see you guys tomorrow. Cheers.